Hello and welcome to The Pitch, brought to you by Livewire Markets. I'm Ali Selby, and today we're going to be talking about the resurgence that we're seeing in Japanese equities right now and what that could mean for investors like you. To do that, we're joined by June-Yon Kim from Lazard Asset Management. Thanks so much for joining us today, June. Really excited to feature you on the show.
Well, thank you for having me.
Japanese stocks have been basically overlooked by investors for the last 30 years. Talk us through the history of the Japanese stock market, where we are now, and why this moment is important today.
I think you have to rewind all the way back to the 1980s. A lot of people will forget the fact that Japan was actually the largest market in the world during the bubble of the 80s. People talk about the Magnificent Seven. End of 1989, 1990, 8 of the 10 largest companies in the world in terms of market capitalization were actually Japanese. Because of that, obviously Japan was a very overvalued market during that financial bubble, and it took literally decades for that to normalize. Because of that valuation headwind, Japan has struggled as an equity market for probably a post the bubble for the first 20 years or so after the bubble. More recently, over the last decade, with the advent of Abenomics and also as valuations have become much more normalized, we've actually seen pretty good equity performance. Unfortunately, relative to the US, it hasn't been outstanding. That's how come I still believe today is being ignored.
What kind of earnings growth expectations can investors expect from Japanese equities?
Over the last 10 years, earnings for, if you look at MSCI Japan, those have compounded about 7% per annum, which is actually slightly higher than the US or Europe, surprisingly. I think going forward, we could expect a similar level, if not even a little bit better, because the fact is what's really interesting about Japan, and one of the important things about thinking about Japan is when you invest in Japan, you're not buying the country, you're buying these listed companies. The outlook for these listed companies is extremely, if you're bullish on the world, nearly 50% of these revenues for a lot of the larger companies in Japan come from outside of Japan. And this is how come the trajectory of earnings is so attractive for these companies. Furthermore, a lot of companies are overcapitalized. So what you're going to see is a reduction in share count. And that would also push up that EPS growth number that I just mentioned.
What are some of the characteristics that you look for when identifying those companies that have those really above average earnings growth expectations?
First and foremost, we're fundamental investors. We're looking for how they're positioned within their industry, within their sector. What's their competitive advantage? What's their competitive moat? How are they positioned vis-a-vis their competitors? And really trying to understand that fundamental premise, that fundamental outlook for the company more so than anything else. And the quality of management, the underlying outlook for the end markets, anything that a typical fundamental investor would look for. But we're looking for expectations where relative to consensus expectations, those expectations haven't been fully discounted more so than anything else.
June, can you talk us through some of the sectors where you're seeing oversized earnings growth today in Japan?
Yeah, 2 areas where it has potential, better than expected earnings growth. One would be financials, particularly the banks. The banks would be significant beneficiaries of a normalization in interest rate policy. How that would work is with the increased policy rate, that will translate into increased lending spreads for the Japanese banks. The second area where we could see potential, further, better than expected earnings growth would be the materials sector. One example of this would be a company called Shin-Etsu Chemical. Shin-Etsu has 2 main lines of business. One would be their PVC or materials business, which would benefit from an improvement in U.S. housing demand. The other part of their business is Shin-Etsu is the largest manufacturer of semiconductor wafers. As we see a recovery in the semiconductor manufacturing area, Shin-Etsu would benefit from increased demand in wafers overall.
Is there a bank that you're really liking that you want to point to within the financial sector?
Yeah, we're overweight Mitsubishi UFG. They're Japan's actually largest bank. They have a very good underlying domestic business, which would benefit from that potential improvement in policy rates or increase in policy rates. And at the same time, through their minority ownership of Morgan Stanley, they benefit from that wealth management growth that what Morgan Stanley has seen in the United States, elsewhere in the world.
Okay, well, thank you so much for your time, June. I really enjoyed that conversation.
Thank you.
If you enjoyed that too, don't forget to subscribe to Livewire's YouTube channel. We're adding so much great content just like this every single week.